Hi everyone, my name is Sam DeCourt, Wealth Advisor at Pi, and welcome to our July monthly video update. Joining us today, Pi Fund's founder Mike Taylor and Head of Australasian Equities Michelle Lopez, who joins us from Sydney. Hi Mike, hi Michelle.
Hi Sam.
Hi Sam.
Mike, you've just landed back in Auckland from your trip over to UK and Europe to visit our London-based team. What were the kind of main findings from your trip over there?
Yeah, so I spent a week with the London team, Toby and Dom. Always find it a bit of a buzz to go to a big city like London, and certainly the office over there is really humming at the moment. You can't beat on the ground feel for an opportunity to meet with various economists over there, as well as attend an Ice House event. So you get an understanding of the deal flow and the macro in country versus kind of trying to just read it through notes that we receive over here. So that was really helpful. Also got the feeling that Europe is cheap, certainly a lot cheaper than the US is at the moment. And, what's the catalyst for that to change? I'm not sure, but I guess what it means for us is that there's valuation support over there and that the earnings story is supportive as well. And we see it kind of broadening out from just AI names to more broader sectors within the market. We spent a bit of time as well looking at the process, stock selection, discipline, and I think we've come away with an improvement to our investment process from that trip.
Good to hear. And I know you also tacked on a little bit of a family holiday. What was your favourite destination?
Tough to choose actually, but really enjoyed my time in Greece. So loved the food and the crystal clear blue water.
So outside of Europe, what are the kind of main points that have been happening in markets over the past month?
So markets have gone through a bit of churn. The AI story has had a few speed wobbles. I say speed wobbles because, I don't have any fears the sector is slowing down. In fact, the opposite really, it's continuing to accelerate. The semiconductors, so that's the chips that get manufactured for the data centers, etc. Those companies, excuse me, had gone through a massive run and a pullback. I think the semiconductor index fell about 20% in a 2-week period. But we're not really concerned by that. I think it's just healthy profit taking, as you see in the bull market. And actually the broader market, the equal weighted index within the US was broadly flat and just has kind of been churning throughout the month. So we're still very positive on the market. We continue to see the AI story broadening out. And I just read today actually that this is one of the fastest or best quarters for positive earnings revisions since 2011.
Well,
yeah.
Thank you, Mike. Michelle, over to you. So in our industry, we spend so much time talking about share markets, share prices, indices, fund performance, unit prices, but we sometimes forget that what you guys do is that you're actually investing small ownership stakes in real businesses. How are you feeling and how is the team feeling about the underlying companies that you guys are investing in across the 4 Aussie funds?
Well, Sam, we're actually quite confident, and I'll tell you why. Acknowledging that the last 12 months have been quite challenging for specifically our part of the market. But when I look at what we actually own, I feel really good about it, as does the team. If we take a step back, and you mentioned this, and Mike just did as well about the process. We've got a really disciplined process here, and we apply that process in good markets and in tough ones like we've gone through in the last 12 months or so. As you know, we run concentrated portfolios, meaning we hold a small amount of very high quality businesses that we know inside out. And we understand what a business is really worth and when to own it at the right price. So as you may appreciate, Aussie small caps today are actually looking very cheap and they're very underowned. So we've actually used this sell-off as an opportunity to what we term upgrade the quality of the portfolio. And what that means is that we've been able to pick up some very high quality businesses that have just been indiscriminately sold off. So if I look across the funds, we have a range of companies across a number of industries, and many of them on very attractive valuations. Why that's important is that it's setting it up for future compounding returns. So that's why we're feeling confident at this juncture. Sam, it's the same process, it's the same focus, and it's the same reason why we've been able to deliver that longer term outperformance for the funds.
Thank you. And Michelle, in the last 6 months or so, we've spoken a lot with you and the rest of the Australasian team about the challenging environment in Australia caused by the 3 quick interest rate hikes over there. Now we're on a pause. What is the current feeling about which way interest rates are going to go in Australia, and how may that impact our part of the market?
Yeah, well, we're still in a rate hiking environment. The market's actually still pricing in one more hike this year. So the near term, the very near term, does remain a headwind. And that's been part of the pressure that we've seen in the small cap market. But looking further out, and not that much further out, we're already well past the halfway mark of 26. But if we look into 27, we're actually quite optimistic here. The picture underneath is shifting. So we've seen a very genuine slowdown in the consumer. We are seeing a tick up in unemployment, and whilst that's uncomfortable now, it's exactly what takes the pressure off inflation and off the RBA. So on the ground, we're hearing the conversation actually shift from how much higher to perhaps when do we move back towards a neutral stance. And that pivot from a hiking environment that we've seen to a neutral or cutting is really important for us in particular, given we're investing in the small cap, mid cap part of the market. And that's the part that's been hardest hit in a rate hiking setting. But the sensitivity cuts both ways. So once we have that pivot, the market does move, the equity market moves quickly, and small caps are typically amongst the biggest beneficiaries. So while today's setting is still restrictive, really the direction of travel from here is exactly what we're positioned for. So we're owning, as I mentioned, these quality businesses that hold up through the tougher time, but are really ready to run when that cycle turns.
Very good. Thank you, Michelle. Thank you very much for joining us. And thank you, Mike, as well. And thank you very much to our clients and audience. And we'll see you next month.
Great. See you.
Thanks, Sam.